Hey traders, welcome back to the fifth video that forms part of this 10-part strategy series, where I will reveal simple yet powerful strategies tailored towards trading the Nasdaq and the micro Nasdaq futures markets. Again, these strategies are perfect for everyone, whether you're a beginner or more seasoned trader. Watch again as I reveal easy to follow trading methods that you can start using right away without wasting your time hunting for opportunities every single day. Alright, for my next strategy, I'm going to show you my early entry advantage tool suite, which basically uses two different indicators. The first one being a golden reversal line, that's the red line you see there, as well as a green line. And it basically spots reversal areas in the market. So you also have a little dot there, the red one and the green one, which then fires off a signal whether they should go long or short. Alright, and then secondly, I've got my momentum grid applied to my chart on the downside there. It basically calculates overbought and oversold conditions. Now it also uses multiple periods, up to 5 different signals. So the more signals you see, the stronger or higher potential of a reversal that you're potentially going to see. You can see it previously, that green few bars there on 3 time frames, price moved to the upside, and then a lot of red bars as well, price moved down to the downside again. Then I've also added the institutional trade location indicator, which I used in the previous video. I used that as a trade location. So price should hit those that trade location. I would like to see overbought or oversold conditions, as well then as a break of the golden reversal line. In this case, price moved up to an upper institutional trade location. There was a lot of signals that market was overbought, as you can see on the momentum grid in the bottom there, on 5 different time frames. In this case, the golden reversal line, the red one, since I wanted to go short, was a little bit far down to the downside. Been quite a drop that price needed to make before price would break it. So I wanted to see price update, or let's say the golden reversal line update like it is just over there, get closer to the current price action. And all I really needed to do now, since price already hit that institutional trade location with the overbought condition, I had to wait for a sell signal, a red dot. And it wasn't too long that a red dot actually appeared, and I decided to go short. I like trading with 2 contracts here, and I was pretty aware that if I had to place my stop loss above that recent swing high, which first made contact with the institutional trade location, that it would have been about a $300 per contract risk. Now I trade with 2 contracts, so I don't want to take a risk of $600, so I was willing to tighten the risk a little bit. Potentially it was a little bit too close to current price action, but what I did like about that, the reward potential towards the lower institutional trade location was more than a 1-to-4 ratio. Right, so I eventually got filled with my ATM strategy. I dragged my stop loss to a predetermined stop loss level, set my first target at a 1-to-1 ratio, and dragged my second target to a 1-to-4, assuming that if price were to move lower, that it might head towards that lower institutional trade location. Right, and it wasn't long, price eventually started moving downwards. First target was hit. I started rapidly trailing my stop to the downside. Price actually had a bounce at the 1-to-3 risk reward ratio or level. Nearly got stopped out on my trailing stop there, but eventually price moved all the way back downwards again and reached my second target, leaving a 1-to-4 on the second one. So overall for this trade, you'll just over $800 in 11 minutes. Again, a very easy strategy that anyone can follow trading the Nasdaq or the micro Nasdaq contract. What I like about this strategy is that it forces you to remain patient, and it gives you that discipline to wait for the right entry conditions. In this case, we wanted price to hit an institutional trade location. As it did with that setup, we had an overbought situation, and we had an overbought situation on 4 different time periods, as shown by the momentum grid. And then as soon as price then broke below the golden reversal line, gave a sell signal, it was time to enter. The markets tend to reward those that remain patient and disciplined, And this strategy is why I like it so much. It forces those two very, very important habits that make successful traders succeed in this business. And that concludes today's 5th strategy video. If you want to see the remaining strategies in the series, then don't forget to subscribe to this channel and please hit that notification bell. That way you'll never miss out on any of our upcoming videos. Also, if you would like to get your hands on indicators similar to the ones I've shown you here today, then please consider joining our Ninjacators Indicator of the Month Club. There will be a link below this video in the description, so please go and check it out. Thanks for watching, and until next time, happy trading.